All right, everyone, here we are with another video with Invest for Tomorrow. We're going to talk about the SPX, the S&P 500 index, how it's been reacting previously, and how the next pump has finally been announced on Friday afternoon. I apologize I didn't get to do this video sooner. So many things caught up with, but I'm here to deliver it before the pump comes, and I'm really excited because they're going to pump through the rest of the year leading on to the next year. So it's going to be pretty interesting. So first thing I want to say is, first time viewers and investors, welcome to the channel. Subscribers, welcome back, and let's jump into this information. So stay tuned till the end of the video because we got a lot of things to cover. So the first thing is, when we zoom out, you can see the S&P 500 index has been rising, right? And if we really zoom out all year, right, it's been an all year thing. So let's go ahead and zoom back in here. The most recent pump that we talked about before the recent pump that just happened, which we're going to look at in just a moment, was December 1st. The lows of December 1st was 36.20 and it ran up to 36.78. So that right there was a 58-point jump. Now the most recent one was actually on the 8th. And we had uncertainty, which I talked about in the last video. For those of you that didn't get to watch it, I talked about it, that there was going to be uncertainty afterwards. And then if this bounced back, which I'm not sure if I mentioned that, but I should have. What I did say is that we were going to have to watch closely how this would react. And if it bounced back, then there was that hope, or finally they announced that there was going to be more pump dates, because this was the last scheduled pump for the last term. And from this point forward, there was that uncertainty that no pump was going to be announced until Friday and late in the afternoon. You can see how the market reacted late in the afternoon after 1 p.m., starting to anticipate the news or the excitement of a pump coming up for the next week. So we were left kind of in a gray area here, not knowing if there was another pump, because they say the next release date is Friday the 11th, but they don't say until the 11th if there's going to be any more pumps. So that's what's going to happen when they're done doing pumps. We're going to be left with the uncertainty to know if the next pump is coming. And if it's not, it's going to continue in this direction. To this point, they haven't announced, we're stopping the repurchase agreements, but when that does stop, we need to pay very close attention to how the stock market reacts. And I want every single investor to be aware of it and prepared for it. So the most recent one, it hit lows of about 36.78 and it ran up to these highs here about 37.08. So that's a few points jump too. So right there, there's individual ticker symbols every time these jumps happen, moving up with the S&P 500 index. And that's why I'm doing these videos, to make you guys aware that there is an opportunity to maximize profits and minimize losses. Now, I'm not here to tell you to buy, sell, or hold anything in particular, right? Or telling you guys to buy anything or sell anything, but I am here to inform you guys on how the chart is reacting and on the great news that there is an opportunity to make some money as long as these Federal Reserve pumps continue. So when's the next pump? So the next pump is on the 15th, right, in the morning. And this is why it's pretty good news that it's moving on till next year. Basically, the second week of January is when we have the next release date. We're going to be left with uncertainty till that day. But it's crazy to see that the year is 2021. I mean, this year has flown by. I don't know about you guys, if it's been a long year or a fast year, but to think that 2021 is around the corner is pretty crazy. And it's also good news to know that these pumps are going to lead into 2021. For now, these pumps do have an effect though, and that's something that we need to realize, that there's an opportunity to make these plays, but when these pumps are over, it could have a dwindle effect on the market overall. So that's something that we need to be on the defensive side of things, right? Or be aware of, at least. I don't know if it's going to affect the market by just making it fall down, but what I do know is that these pumps, they don't really instigate this direction. By the way, the pumps aren't here to make the whole entire market go like this. That's not what it does. The pumps, what they do is they stop the overall market, right, or the S&P 500 index from being so volatile from all of these upward movements. Like if you could see, yeah, it moves up, it slightly moves down, it moves up, slightly moves down. That volatility is normal. But if there was no pumps, we would see that. And also, it wouldn't be your typical up and down, up and down, up and down, and then moving itself up and down. No, it would actually be an up and down, going downwards to some point where there would be a bottom, and then from that point forward, it would rebound. So, I mean, what it does really is stop the whole entire market from going to newer lows. That's what I've noticed. It doesn't really instigate the fact that this is all going in an upward direction. Overall, it does that because of the fact that it attracts more investors, and investors stay. Because one of the things that makes stocks go up too is not just revenue and profits, because that's one of the biggest things that makes stocks go up, but the overall market goes up due to the fact that money is staying in the market, right? The moment people pull money out, then that's when it becomes a big issue. And a lot of institutional investors have millions and millions and billions of dollars in the market, sitting in the market. We got to think about this for a second. So these pumps are actually maintaining and attracting investors to stay in the long haul, right? Whatever the long haul is. So what I've noticed is that every time the market was going down, the fact that these pumps exist slightly rebound and attract investors back in. You could see that. And these pumps have been going on since the fall, right? And you could see that every single time. So when it's like going down, it just bounces right back up. It was going down, and it bounced right back up, So in the long term, it creates an effect that it attracts more investors. It keeps investors playing in the market overall and taking a shot at it. And here we are with the small increments, which is where I circle, to see what is the short-term effects of these pumps, right? Which you can see it's several points within that day. And that's right there pretty impressive to pay close attention to and probably, look into. You got to do your research and due diligence. I'm not here to tell you to buy, sell, or hold, but it is something to look into. And in the short term, it has shown and proven itself for time after time that it does have a positive effect on that day. Now, the long-term effect is that it's keeping investors attracted to staying in the market. And that's very important as well overall for the whole market long term. So when these repo purchases do end, that's where I ask myself, what will happen? Will it just fall? I don't think it's just going to collapse. These pumps don't hold up the market completely, but there will be some type of effect that it might unattract investors, and that's where the effect would probably come from. So the 15th, it's on a Tuesday, so I want us to look at this. So we got Monday and then we got Tuesday. So there's two ways this could play out. And for the most part, I've noticed most of the time that on Monday, it falls down and it levels off. Obviously, it's not as big as this much, but you could see here last week, it kind of fell down, leveled off, and then on Tuesday, it bounced up, fell down, and then it went up to those numbers, right? You could see the last time here, it fell down, it leveled off, and it was building the anticipation towards the end of the day for the next day, and it bounced up. So you want to watch Monday, how it's reacting. If Monday does this, Monday might be a time to look into things and see what's going on, right? And if it doesn't do this, the other effect is that it actually continues the excitement and anticipation and it levels off. So what happens on Tuesday on each perspective? So the first perspective, right, falls down, levels off. On Tuesday, you would see the pump reappear and bringing the stocks over, right? Or the S&P 500 right now individually is stocks and the S&P 500 is the overall market. It brings itself back up and kind of ends up at this point where it breaks even. We've seen that before. I've seen that. I have that example here, and I have it in a few other examples throughout the pump dates. If it doesn't fall there, it actually surpasses it a little bit, and it ends up above it or maybe slightly below it. Now, for the most part, I've seen it actually break even or slightly go above it. Now, what happens the next day? That's what you need to watch for and see, because sometimes, if we're towards the end of a period of pumps, you would see this effect. Sometimes that happens even when the market knows that there's another pump coming up next week. But if you play it out in the long haul, which you can see, the beginning, right, of this whole entire period of pumps is the first one. You could have gone in here. This is an example. I'm not telling you that this is where you get in. This is an example, just giving an example of how the chart is describing and what would work out. You get in somewhere here, or you finally watched everything and you decide to get in somewhere here, and you ride through the whole entire pump scheduled dates, and you would start here at the 35 mark and end up here at the 37. That's a 200-point difference. Just the S&P 500. You can imagine individual ticker symbols that are similarity to how this is moving. So there's different ways to play these pumps. So once you know when the pump dates start, you need to see how it's behaving the first week leading on to Friday, and then that's when you decide if you want to play these pumps throughout the whole entire time frame, or if you're going to jump in on them, weekly, or daily, or whatever it is, swing it, swing trading it, and day trading it, or whatever scalping you're trying to do. I mean, it's all about your preference, how you feel and everything. And again, I'm not here to tell you guys to buy, sell, or hold anything in particular. I'm just here to describe the chart and what the charts are showing and what strategy may work according to what you see. I mean, there's different ways to play it, but that's all optional, and you don't even have to do that. And if you really don't feel comfortable taking a position, don't do that. But I do advise paper trading. Paper trading is a great way to see for yourselves without really using your own real money and get a feel for everything. But just because it reacted a certain way doesn't mean that it's going to react that way again. So that's why paper trading, it gives you an idea and a feel, but it doesn't mean that you're going to get those same accurate results every single time. So that's the one thing I would tell people to do, paper trade, because it doesn't involve real money and it does involve real time investing, right? And you can use different strategies and practice and learn. But this right here is basically speaking for itself. You guys, again, have to do your due diligence and research, but I highly advise at least seeing for yourselves what's going on using a paper trade and so forth. So here we are with the next example. So Monday doesn't go down and fall and level off. What it does, it goes up and it levels off. So on the day of the pump, it actually brings itself to newer highs. And then after that, we have to see how the week goes. But sometimes this is the other effect. It brings itself up, levels off, and the next day is the date of the pump, and it brings itself up to newer highs. This is the one that's a little bit more difficult to know where it's going or how it's going to go, because of the fact that when you actually see this, right, effect here, it went up Monday and then it actually fell on the day of the pump and then it ran back up, so that gets a little bit more confusing. And this is the one that is a little bit more difficult to pay close attention to what's going on. But on the date of the pump, it does rise. It does rise. You just have to watch it very closely, and it's a little bit more volatile, and we need to see what's going on from there. But for the most part, on the date of these pumps, the stock market is going up, and it's going up several points, right, for the S&P 500 index. And just based off the S&P 500 index, there's 500 ticker symbols within it that are rising up with it. So that is my video. That's the information here on this. For those of you that have never watched this, I do these weekly. So if you felt like this was valuable and informational, stay tuned for the next video. Subscribe. Don't forget to click on the bell to turn on all notifications so you don't miss a single video that I post. Share this with your friends and community. And don't forget to hit the like button to let me know that you watched this video. So thank you guys so much for watching. And let's make some money.